So good afternoon, everyone, and welcome to our regular Thursday afternoon Innovative Business Advisors webinar. As you know, we had new legislation passed on December 28th, or it was signed into law on December 28th. And as a result, we have quite a bit to update you with. So we're going to continue along with that series. We're in our third week of giving you an update on the impact of the December 28th legislation. On our panel today, we have Steve Denny, who will be our primary presenter, principal with Innovative Business Advisors. And joining us is Terry Lammers. Terry's back with us again this week, also principal with Innovative Business Advisors. And the three of us will be your panelists today. So as always, this is a Zoom portal. You will see at the bottom of your screen a Q&A dialogue. We ask that if you have questions throughout the presentation to type your questions into the Q&A dialogue, and we will answer those questions as we move through the presentation. So with that, Steve, I'm going to go ahead and turn it over to you, and let's get started with the presentation.
Fantastic. Thank you, Marquita. Good to see you this afternoon and hear your voice. And as always, appreciate your leadership on these weekly webinars. And Terry, great to have you back.
I'm back.
Great to have you back with us. All right. We're going to dive in today. We've got a lot to talk about, and it's all about SBA loans. So we're going to focus solely today on the SBA loan programs. There have been a lot of enhancements that were made as a result of the Economic Aid Act, which was signed into law on December 27th. And we're going to cover those in detail. And we will, of course, provide copies of these slides and so forth in the replay. And then there are several updates to the PPP as well. The Department of Treasury and the Department of Small Business Administration have released several new FAQ documents. All the new applications and forgiveness applications have been released. We're going to attach all of those forms to the replay this week as well. So they'll be up and available on our YouTube channel on each of the replays if any of our audience members need that information. But today, we're all about SBA loans. And we're going to talk a little bit about the specifics that they've got in each of those areas. And I want to start by just reminding everybody about how the SBA loan program works, what are the specific programs that they have, and traditionally, how have those programs operated and what have been the terms available under those programs. So the first is the microloan program. If you need $50,000 or less to start your business or run your business, the SBA considers those microloans, and there are specific agencies that are specifically identified to provide those loans. Within the St. Louis area, it's Justine Peterson is the primary administrator of those loans, and relatively easy process to qualify for. You can use them to open a business, to do rebuilding, to repair, to enhance or improve your small business. So it's pretty much like the big program, the 7A program, where you can use this money in a lot of different ways to handle the cash flow of your business. As I said before, traditionally these have been a maximum of $50,000, and they're typically scheduled over a 6-year repayment period. The primary program that the SBA administers is what they refer to as the 7A program. And the 7A program accounts for a little bit better than 2/3, roughly 70% of all of SBA lending. And traditionally it has been maxed out at $5 million. So you could have multiple 7A loans, but the aggregate amount of those loans couldn't be any more than $5 million, or you could have a single SBA loan up to $5 million. Traditionally, they have been on 7-year terms, although the banks have expanded some of that, and we'll talk about that a little bit further. And there have been various levels of guarantee available. The maximum guarantee available to a lender was 85%. And generally, these are working capital loans. They're short and long-term working capital loans. You could use them to refinance business debt. You could use it to buy furniture, fixtures, and equipment for your business. You could use it to buy a business. These are basically cash flow type of loans, if you will, for the business. And again, this is 70% of the SBA's normal activity happens in these type of loans. Terry, you got something to add in that regard?
No, nothing at this time. So
okay, I saw you set up there, and I thought maybe you had something you wanted to throw in that regard. But yeah, it's
so I got to look closer at the numbers.
okay. Well, this is the vast majority of lenders that administer SBA programs. The vast majority of them administer 7(a) programs, so it is the most popular. The 504 program is a really excellent program for growing businesses, and 504 allows you to borrow, again, up to $5 million. But when you understand the structure of it, typically the 504 component of the loan is only 40% of the component. So, in essence, if you're a growing business and need up to $20 million to go out and buy equipment, long-term machinery, real estate, hard assets for your business, you could incorporate, traditional commercial lending with a 504 loan, and the 504 loan will pick up at least 40 or up to 40% of the total loan amount. This is a great program to use to buy, real property and long-term, machinery and equipment for your business. In the past, it's been capped at $5 million. The amortization period is 25 years. It's typically fixed rate financing, and you'll see a lot of large commercial companies, utilize this. When you're seeing shopping centers built and things like that, there are a lot of commercial real estate transactions that include 504 components to it. So widely utilized in that area. We don't see it as often for small business owners. And I often think it's one of the programs that they probably just know the least about. So if you have a need for, real property or machinery and equipment in your business, this is a great opportunity to explore this. But there have been significant changes to each of these programs, and we're going to talk about them a little further in a few minutes. But before we do, let me talk about what's called the SBA Express Bridge Loan. So if you're in a situation as a small business person today, and you've got a relationship with an SBA lender, and you have a quick need for up to $25,000 if you're facing a cash crunch or something like that, the SBA specifically has what's called an Express Loan program, which allows a lender to issue you a loan within 1 to 5 business days. And it is designed to be very short term and then included in terms of a larger refinancing package. So right now they have put together some specific language around that, particularly for those businesses that are going to be applying for an EIDL or another loan program to get them through this pandemic. So I wanted to call that out, particularly if you're facing a cash crunch. You can go to your local SBA district office, go to their lenders list, and every district office publishes their local lenders list. You can pull a copy of that list, and you can see there's a little checkbox next to each of the lenders' names telling you what SBA products that they represent. So if you're looking for a bank that just does SBA Express Bridge Loans, the fastest way to source one is go directly to your local SBA website and pull down their lenders list, and that'll give you the whole list of folks that are qualified to do that. Now, before we get too deep here, I want to say that the SBA has issued a lot of loans over the last 30 years, and the new Economic Aid Act really breaks down the lending guidelines into 2 areas. The first is for all those folks that have existing SBA loans out there. If they have micro loans, if they have 7(a) loans, if they have 504 loans, all existing SBA guaranteed loan products, The first thing we're going to talk about is what the Economic Aid Act refers to as the debt relief program. So if you're a business with an existing SBA loan, this applies to you. And some pretty significant changes here. So again, it applies to all loans. The first thing that everybody probably that already has a loan may know is that the SBA under the CARES Act and then under the Economic Aid Act will make 6 payments for you. This is not a deferral. You don't have to repay them for that. This is simply a gift where they will make 6 payments for you. So those payments include the principal, the interest, and any fees that are included in your payment amount, but it is capped at $9,000 per loan. So per loan, per borrower, per month, and that's the way that that is capped. But you know, that's a $54,000 gift. If you had a loan that was dispersed prior to September 27th of 2020, there are some special provisions as well. First off, the SBA in the past allowed lenders to defer loan payments. So during the pandemic, one of the things the SBA did was encourage lenders that had loans with severely affected businesses to defer those payments, to work with the business owners and set up payment deferrals. And if you were in a situation where you had an SBA loan that was not on deferment, the SBA began making payments immediately for you in those situations. And you know, if you had a loan, let's say you had an SBA loan that you had taken out in January of 2020, pandemic hits in February and March and April, etc. It was actually the April time period when the SBA began making those payments. So you may have experienced the SBA making 6 payments for you beginning with the April time period last year. If you were under a deferment situation, what happened was the lender has to file with the SBA the terms of your deferment. So in the past, before the Economic Aid Act, the lender had to go to the SBA and get permission to defer your loan. And when they did that, the SBA, my understanding is the SBA did allow quite a lot of deferment over the last 10 months. And when they did that, the bank had to tell the SBA exactly how long that deferment period was going to be. So now what's going to happen is if you are under a SBA loan and you have an agreed deferment period, you will still receive those 6 months of free payments, and they will begin on the payment date following your release from the deferment period. So, you had a double benefit here. First off, you got your payments deferred because of the fact the pandemic may have caused your business to close. You might have been non-essential and not able to operate during a period of time. So you've been able to defer your payments, and now as soon as the clock starts running and you have responsibility for making those payments, you'll get the next, or I should say the first 6 payments made on your behalf by the SBA. If your loan was made after March 27th, after the official date of the CARES Act, and then fully dispersed, before September 27th, then you will get your 6-month window began on that first full month that your loan payment was due. So sometimes you might apply for and receive a loan, an SBA loan, or receive approval for an SBA loan in 1 month, and you may not close that loan and actually receive the funds from it. It's some month in the future, and this is designed to clarify situations for those that are in that kind of a boat. What's new is the Economic Aid Act that was signed on December 27th now says that if you had an existing loan prior to March of 2020, you're going to get an additional 3 months of payments beginning in February. So your February, March, and April payments are going to be made for you if you had that loan that was in place before the CARES Act took place. So automatically, borrowers that were current on their SBA loans are going to get an additional 3 months worth of payments. However, there's a loophole here. And the loophole is if you took out a new SBA loan between September 28th of 2020, anytime between then and February 1st of this year, and basically what that, when I say took out, that means that you received the authorization from the SBA, that the lender actually got the formal authorization from the SBA during that time period. Those that receive loans during that time period are not eligible for the free payments. So there's going to be a group of folks once they learn that are not going to be happy about that, but that is a loophole in the current law.
So I'm sitting there, Steve, and I've got a loan in process, not yet originated. And my banker comes back and says, you need to provide this amount of documentation to me so we can finalize origination. I want to hold on to that until February 1st, right? Because I want this to happen after February 1st. Can't do it? No?
Cannot do it, Marquita. So I asked the same question this morning. And here's the thing. If the lender has gone to the SBA and received authorization for your loan, even if it's going to close, let's say it's not scheduled to close until March 1st, right? But if they receive the authorization for your loan during that period of time, it's my understanding that you will not get the 6 free payments, if you will. So very, very unique little loophole. I would not be surprised to see, Congress in its infinite wisdom come back and fill this, but it's certainly going to take a number of people raising their hand and pointing out that's there. And the bankers are just now learning all the facts of all this. So it's an interesting twist. So let's talk about if let's say you didn't have a loan, right? But you want to get a new loan. And Marquita, to your point earlier, if you are in the process of applying for a loan and your lender has already gone to the SBA and received loan authorization, it's my understanding that that loan authorization is going to be for that, probably that date is going to be before, obviously, February 1st. February 1st hasn't got here on the calendar yet. So you may fall within that short window if you're in the process of obtaining an SBA loan right now and your authorization actually happened between September 28th and February 1st. So you want to talk to your lender about that if you're in that situation and see. But let's assume that you're working with a lender and you are looking to get an SBA loan, but the lender has not yet applied to the SBA for authorization. And most very knowledgeable SBA lenders that I've spoken with so far are aware of this. They're holding those applications until February 1st, and they're then going to apply for that authorization in order to get the benefit for their clients. So what happens for those that apply for new loans now? Well, again, these special terms that I'm going to talk about are limited to, only one loan per borrower. So, you can't go out and get multiple loans, but you can use this to refinance potentially. You could go out and refinance existing debt and other things, potentially do some consolidation, wrap multiple loans into a new larger loan. There are lots of things you could do in that regard. First significant change is that the SBA has what's called a loan guarantee fee that is assessed for each loan. And probably folks on our webinar are aware of the fact that the SBA is one of the few branches of the federal government that is self-funding. So the SBA gets a allocation from Congress on the amount of money that they can guarantee in terms of loan funding that they can guarantee, but the SBA's budget is funded by these loan guarantee fees that they assess on every loan that they process, right? And typically those loan guarantee fees are running somewhere between 2 and 2.5 points on every loan. So, $1 million loan, we're talking $25,000. The Economic Aid Act suspended all loan guarantee fees. So right now there will be no loan guarantee fees that are assessed to the loan. And traditionally what's happened primarily on the 7A side is the lender would roll those loan guarantee fees into the loan. So if you were borrowing $1 million and the loan guarantee fee was $25,000, all of a sudden your principal loan balance would have been $1,025,000, right? So a lot of times borrowers certainly saw in their closing statements these fees disclosed, but they may not have felt the initial impact of those fees because it was baked into their loan. But that's a pretty significant win. The next thing they did is our legislators said that instead of the 75 to 85% guarantee, we're now going to guarantee the SBA loans to 90%. So why would they do this? The primary reason is to encourage banks to lend money under the SBA programs. So they're encouraging lending. And the reason why this is in the bank's best interest is now the bank lends you $1 million, right? The bank now has a 90% guarantee against that loan. So even in a worst case scenario, if you default, the bank's going to get 90% of their money back. But more importantly, what it enables the bank to do is then, sell these loans, sell the servicing of these loans to another entity, right? And so therefore the bank can continue to, gets back on its balance sheet 90% of that loan balance. So they have the ability to go out and increase lending in that regard as well. So this expansion of the loan guarantee is huge from a lender's perspective, and it's anticipated that it's going to make getting credit for business owners easier. That's the objective. So pretty big in that regard. Now the bank's got a 90% guarantee that they're going to get repaid. The next big thing they did is they expanded the 7A program from 7-year repayment schedules to 8-year repayment schedules. Now, they actually allow banks to do so for up to a 10-year repayment schedule, because most of the loans that banks then sell into the secondary market, the highest volume of those are 10-year loans. So the SBA is allowing banks to expand that whole repayment period out as well. But again, giving the banks that additional year of guarantee gives them more room to add additional commercial loans into the marketplace. But for the borrower, the big benefit is not only will loans be easier to come by, but again, a borrower that's got a new loan beginning in February 1st is going to get their first 6 payments made for them again, up to $9,000. So, it's another $54,000 gift that goes out to all new borrowers beginning February 1st. A pretty nice incentive, I would say. Nothing that we've ever seen before in our careers in this particular industry. So, a couple of other key provisions. If you are a business and you are in specific areas, you can, in addition to the 6 months, you can also get an additional 5 months for a total of 11 months of potential payments made for you. So, my simple math is 11 months times $9,000 a month. There's a $99,000 essentially gift to business owners in hard hit sectors. And those hard hit sectors, they can use this benefit for 7A loans or 504 loans. So those sectors are all of those that fit within these industrial classifications. The big ones are, hospitality and accommodations, but there are several other sectors within this list. So I would encourage folks to take a look at this, and if your business operates within these sectors, now's a good time for you to really think hard about, if you have debt on your balance sheet, potentially refinancing under one of these programs, or if you've been thinking about adding machinery or equipment or other capital investment in your business, or maybe needing some money for additional working capital. Now is a great time for you to think very seriously about that and factor in this $99,000 gift that's available to you there. So pretty significant. Marquita, I don't ever remember seeing anything like this before. And you've been in banking most of your career. What are your thoughts?
No, never. And Steve, my mind is kind of, the wheels are turning here around, you know, as a business owner, how would I take advantage of this in a way that I may not have thought to take advantage of this before? And some of the things I begin to think about are, just as you said, funding growth, if you will, in the business. If in fact that had been deferred, and now you've got a much more doable financial environment to use debt to finance that growth. The other thing, Steve, that I'm kind of sitting here thinking about, and I really am curious to hear your opinion and Terry's opinion on this, and that is staying within the box around this program, meaning that it is a business owner who has grown the business to this point, and now I have an opportunity to use these programs to allow my business to survive, versus the scenario where I am an active business acquirer, okay? And I see an opportunity here to look at these programs and the specifics of these programs as a method to use debt financing, and some of it forgivable, to actually acquire a business. Let's say I've got a competitor in the marketplace who's really struggled with the pandemic and is just throwing their hands up. And I could see potentially, if I don't end up in jail doing it, using some of the forgiveness in these programs and these very lenient financing opportunities to buy a business I might not have purchased before. Terry, you've bought a lot of businesses. What do you think?
Yeah, I think that would be nice. Yeah. Or if you're looking to expand, you know, you're hitting the nail on the head. Expand your business, or there's a new truck that you've been putting off that would be nice to have, but yeah, you know, you didn't quite want to get over the hump. I mean, it's a great opportunity, that, or for the people that are fortunate enough that, you know, all their employees, they qualify for it, but all their employees are working. Well, and that's kind of a use of PPP money, so it's a little bit different, but yeah, it's just a heck of an opportunity. It's a lot of money.
I think it gives a lot of businesses, and Steve, I really want to hear your opinion on this. Is you're sharing a lot of facts, but I really want to hear your opinion. It looks like there's a huge opportunity for people who want to acquire businesses to go out and use some of these programs to do a deal that you might not have been able to do before. But before that, Steve, let me throw Paul's question out here, because I think that might help us to think about how much additional debt financing we have available and what the burden is to pay back that debt. Paul asked the questions for loans currently on deferment. After the deferment period has ended, will the SBA still make another 6-month payment? So let's say it's on deferment. So the deferment is only that I am not paying principal and interest. The SBA is not paying that for me. I just am not paying it, but I still owe it. Now the loan begins to resume payments, but I have an opportunity to take deferment. So the question he's asking, does that mean 12 months deferment or 6 months deferment and another 6-month deferment? So clarification of the words of deferment and almost forgiveness, because the SBA is paying the principal and interest for you, not in a scenario where they're just delaying your responsibility for principal and interest. Could you just kind of clarify for that? I may have created more confusion than clarity in that.
No,
you will clarify.
I think I get it. So if you during the pandemic, if you had an SBA loan and you went to your lender and you got a deferment, and then Paul's question assumes that you have a deferment, right? Which means that the lender had to go to the SBA and get approval for that deferment. So that happens. So the SBA knows you're under deferment, right? So, and Paul's right. They had, the general deferments are 6 or 12 months, and we're going to talk about those a little bit more in just a minute as well. But let's say for the sake of example that you were given a 6-month deferment. And a deferment means that you basically get to skip the next 6 months, and typically they'll tack them on to the back of your loan, right? So basically, you're deferring the payment into a future period of time. Now what the SBA, since the SBA is aware of the deferment, what the SBA is doing is, once you get to the end of that 6-month period, on month 7, the SBA will make your next 6 payments for you. Okay, so the payments that the SBA makes for you are not deferments, and there is no repayment requirement whatsoever. It's basically a gift, and Congress has determined that that is a tax-free gift. So you're not going to get a 1099 miscellaneous income that says Uncle Sam handed you $54,000, and that will just cover those 6 months. So I think Paul was getting to that in his question. So yes, he would have been deferred for 6 months, then immediately coming out of deferment, his next 6 payments would be made for him, and then his loan would resume in normal and customary terms.
But
So,
my read of it, as Paul asked the question, is the scenario in which the SBA is paying the next 6 months is a lot more valuable to me than the 6 months that they were deferring, because those deferrals actually have to be paid at some point in the future.
Right. Yeah. The deferrals.
It's a deferral.
Yeah. You're going to have to make those payments again. You're absolutely right.
Yeah.
So if you're going to do refinancing, or if you feel like now's the time to kind of step on the gas and expand your business and create some jobs, or use the money to retain jobs, there are some special provisions in that regard as well. And, there's a lot of minutia in that stuff. So what I'm going to call out for our audience is, be aware of the fact that there are special conditions for these 3 scenarios: refinancing, job creation, and retention. Talk to your lender, talk to the banker that you normally use, and if they don't access SBA programs, you can very easily find a bank that does a lot of SBA program lending by going straight to your local SBA district website and pulling down their lender list. And you can talk to various SBA lenders and find out the specifics in each of these 3 areas as well. So one thing that we had kind of talked about before, obviously, was deferment. So another thing that the Economic Aid Act has changed is that lenders are now permitted to provide full payment deferment relief for up to 1 year, up to 12 months, without having to seek SBA approval. So the SBA recognizes that they're pretty busy these days, having just done basically 30 years worth of work in the last 10 months. And, with PPP now reopening, they're going to be and are very busy again. So the Economic Aid Act provided a way for lenders to be able to provide deferment and not have to wait for the SBA approval. And if a business needs deferment beyond 12 months, the SBA opened the door to that as well. They never allowed that before. They've now opened the door to that, and they've said that the borrower's got to provide some documentation that it's justified. So there's a whole new process here, and I would say to the audience, give lenders a little bit of grace, because they're all getting this new law as well. So these are brand new laws and rules that lenders are not going to be real familiar with at this point. It's going to take some education for them to really understand what's available here. Because I think that there are certainly, if you're in the accommodation and food service business, you're probably very interested in some kind of a deferment and help. Now, I want to talk about, you raised a very interesting point, and I threw up an example here. Now is the best time in our lifetimes to really consider, utilizing capital to grow your business. And here's why, right? When you think about growing a business is not easy. Most businesses grow at pretty low rates. you know, 2, 3, 4, 5, 6% a year. Most businesses do not grow very rapidly, right? When we're talking about small businesses. And frankly, there are two, what we at Innovative say is there's two primary ways to grow. One is you can grow through strategic acquisition, right? You can go buy, as Marquita said earlier, go buy your competitor. Go buy somebody that's got a comparable product that might add to your mix, or a comparable service. You could go buy somebody that's got, you know, a complementary product. You could buy a company that's got great talent within it. As hard as it's been to hire specialized talent, it might be easier to go buy a company that's got some really good talent residing in it now than trying to go out and hire folks. But you can buy strategically, you can buy, you know, a company and grow that way very, very rapidly. This provides a, you know, these loan programs provide a really compelling argument in that regard. And so what we did is we just took, for the sake of example, let's assume you're going to go out and purchase a business, and you can use a 7A loan to acquire a business. Under the current terms, you know, you're going to spend 10% down. There are some special ways that you could potentially get in for 5% down. But that's another webinar. But just for the sake of being simple here, let's assume you've got 10% down. You can finance 90% of it, and the SBA will be kind enough to make your first 6 payments for you. So, you know, that's a pretty significant discount in the deal, right? And now you've gone out and acquired the growth to take your business to the next level. Might help your business become much more secure in the future as well. And I think, Marquita, your example of the fact that this pandemic has not hit everybody equally. Some businesses have been severely affected, right? And some have continued to do well. Now is a great time to be looking within your industry and seeing if there's unique opportunity to go out and acquire some additional skills, additional products, additional customers, additional, you know, other additional resources. Terry, you've got any particular insight in that area you'd like to share?
We've had a lot of experience with it, but no, you're exactly right. You know, and you know, the one thing to think about, you know, when you're buying another company is the strategic. You know, when we do business valuations, we're valuing the current cash flow of the business. You know, where I was successful in buying a lot of companies is if you're buying a company, you know, say you're a truck repair place and you're going to buy another truck repair shop. Well, there's probably a lot of those operating expenses that are going to carry over to you. So that money falls straight to the bottom line. So that makes it a very strategic purchase for you. If you could, you know, buy the company for what it's, for the cash flow that it's worth. It's kind of funny. I talk about that in my book, where me and my accountant would butt heads, where I would say, but if we buy this company, all these operating expenses goes away and it's going to make this. And he would say, no, you buy a company for the existing cash flow that it has. But, you know, the strategic part of that is there's, you know, it's just a great way to grow your company. And if there's distressed companies right now, that means the cash flow is lower and they're not going to be worth as much.
The second week of February, we're going to have a webinar, and the whole hour is going to be spent comparing and contrasting doing a strategic acquisition versus doing organic growth. And it's, when you look at it from a dollars and cents standpoint, there's no comparison. Strategic acquisitions pay off much faster and with a higher degree of certainty every single time.
Yeah, a cheap plug for my book. I tell a story about that in the book. So
yeah, and I'll even give you a cheaper plug. Go to our website and hit it there and download it off the website.
Yep.
Yeah, Steve, another thing too that I think is worth just giving a little bit of time to today too is the specific NAICS codes that you mentioned earlier, who have an even better opportunity around some of this debt financing. I mean, we know that our restaurant industry has been essentially decimated through this pandemic. And if you pick up people who are in St. Louis, pick up the St. Louis Business Journal on a weekly basis. They give a list of restaurants that have closed. And if you start in last March and come forward, what was a robust restaurant industry in St. Louis is left to those who have had the guts to basically what's I say, tough it out through this process. The point I want to make, though, is in and around our market, there are many buildings that have the build out of the cooking hood, the cooking equipment. And what happens when that equipment is used is it becomes pennies on the dollars in a resale environment. But we will come back and we will all want to go out and eat again. And I think the demand is going to be overwhelming for those restaurants that have managed to hold out. So there could be some really good deals out there where restaurants have closed. And what I call it is barriers to entry or cost to entry. Cost to entry in this market, and probably across the US, if they're similar, is going to be a real interesting financial model, because there are going to be a lot of buildings with that core equipment sitting in the building as an active restaurant left it over the course of the past, say, 9 months. What are your thoughts on that?
Yeah,
you're exactly right, Marquita. If you want an eye opener on restaurant equipment, go to topshopauctions.com. They sell a lot of restaurant equipment, and it's loaded with stuff right now. And I mean, you're exactly right. Restaurateurs spend a ton of money building out these restaurants when they're new, but right now you can get that stuff very, very cheap.
So yeah, when you look at the example here, I mean, you could purchase a business, a business that's going to sell for $2.5 million. Terry, what cash flow would it typically have? What profits would it typically generate?
Wow, that's kind of a wild card, but I mean, I think 10% cash flow is not unusual.
Yeah, I was going to say that easily somewhere between 10 and 20%, right?
Yeah.
So let's say, for the sake of example, you're buying a $2.5 million company that's generating a 5 multiple. So you got 500,000 in cash flow on the business, right?
You mean,
so if it's generating $500,000 in cash flow, right, and you're selling it for 5 times cash flow, the purchase price would be $2.5 million.
Right. Yes.
Okay. So let's say that this business right here, a typical $2.5 million business, has got $500,000 a year in net profits in it, right? And how much does it cost you a year to buy that? Well, the first year it's going to cost you
almost nothing.
Well, the first year it's going to cost you $250, right, in down payment. Plus the total of the payments would be $325 minus $54,000. So, you know, you're making money. It pays you. It's basically buying the business for free.
Yeah.
And every year thereafter, the business is generating $500,000 a year in cash flow, right? And your payment's $325. Pretty compelling reason to go out and consider growth by strategic acquisition, right? And simple thought process.
Absolutely.
Let me show you a real live example. So here's an example that with one of our clients that we were working through a few weeks ago. This client was considering moving into a new location, and the new location would lease for $16 a square foot per year, right? $16 a square foot. When we ran the calculation on what it would take for them to buy the business, they could buy the business for $2.37 a square foot. Now, which would you rather do? Pay a landlord $16 for the right to use their business, or $2.37 and actually own the building yourself?
Makes sense.
Man, I'm telling you, we've never been in a situation where the federal government has made lending this cheap for businesses and made such a compelling argument. I think it not only makes sense, it it makes incredible sense, right? Maybe a once in a lifetime opportunity to begin to take advantage of some of these programs.
Buy low, sell high.
Yeah. Yeah. So hopefully this helps. Marquita, have we had any other questions that have come in?
No, as of now, we don't have any additional questions. Where are we? We're like 15 minutes to the top of the hour. So are we about to start wrapping up here?
Yeah, I would say we've got a couple of additional things to talk about, but I think it's really important. Hopefully we've emphasized it enough here. The lending environment for businesses now is better than maybe it's ever been in the history of the United States, right? The costs are lower, and obviously, anytime you're borrowing money, you want to do so with an assurance that you're going to be paying the money back. But if you're in one of these accommodation and food services industries, to Marquita's point earlier, and you can get 11 months of your payments made for you, and then, even if this pandemic hangs on longer than anybody anticipates, have the opportunity to get automatic deferrals, it's a pretty compelling time to come off the sidelines and invest. And what we've experienced at Innovative is our phone's been ringing pretty much off the hook for the last several weeks as a result of this. Normally things are pretty quiet this time of the year, but things are very, very busy right now. And, if you're on the fence and don't really understand this, I would encourage you to reach out to us, talk with one of our advisors, and let us, work with you individually and figure out what might be the best situation for you personally in this situation. But lenders are definitely encouraged to loan money to businesses right now. They are significantly advantaged to do so, and the rates for borrowers are lower than they've ever been. So it's an amazing situation. The more I think about it, the more compelling it gets. So just want to share with you, next week we're going to do kind of a round robin overview of all the programs again. We'll hit the highlights on each of the various programs. And then in the second week in February, we're going to have a webinar specifically related to strategic acquisition versus organic growth. Is it cheaper to hire somebody and try and grow organically, or is it cheaper to just go buy somebody and add on some existing revenue and profits to your business? Marquita, I think that's got our agenda covered.
Great. Okay. So let's do just a little bit of a recap, Steve, because I know last week we gave update on the PPP program, and we had indicated on last Thursday that the portals would begin opening up. Do we have any sense of how things are going for our customers and for the banks that we have partnerships with around, how this week has gone? What's the volume looking like? How long do we think the money's going to last? I don't want to put you on the spot, but any insight at all? Is there urgency for our audience, or do we think we've got a little bit of time there?
No, I think there's definitely urgency. I talked to 4 banks this week, and they are all very busy, and all of them believe that the programs are probably going to run out before the end of March.
Yeah, good. Okay. Yeah. So with that, let's go ahead and start our wrap up. And again, I'll open it up for anything at all, Terry, that you or Steve want to say in your final wrap up. We've got plenty of time. We've got about 10 minutes. So why don't I turn it over, Terry, to you first? Anything you want to say as a final comment as we move toward wrapping up?
I think just a reminder on the PPP loan that make sure you go back and check each quarter of your business from 19 to 20. Because I have seen some clients where, they ended 20 higher in sales than they did in 19. So they're thinking to themselves, just doesn't work. But maybe in the first quarter, you took a hit, or maybe in one of those quarters, your revenue was down by over the 25%. So just be sure and go back and double check it, and not just rely on the fact that, as a whole, 2020 was more in revenue than 2019.
Yeah. Yeah, that's interesting, and it's a great point to make. And I think I had shared with the two of you before we actually came on the air here today that in my own business, I did not hit the threshold on an annual basis. While I did take a hit, it was not enough to qualify. However, after I did a quarter over quarter year, first quarter, second quarter, third quarter of 19 versus the respective quarters in 20, I did qualify. In one quarter I qualified, and that's all you need, right, Steve? One quarter.
That's all you need.
Yeah.
That's all the application requires.
Yeah. Okay, Terry, anything else? I'm going to give it to Steve next.
Steve, it's all yours.
All yours, Steve.
Well, I think that's very wise advice, and the forms are going to be on the replay. So you'll have the application forms for the first and second draw of the PPP, and pay close attention to that, folks. And then again, I just want to reiterate for the third time, if you're never taken advantage of SBA lending in the past, now is the time for you to strongly consider it. And if you're unsure whether or not your bank even does that type of lending for you, a quick way to find that out is just go to your local SBA district website and pull down their lenders list, and you will see a list of all of the lenders that participate within each of the individual SBA districts. So hopefully these webinars are very informative for you. Our commitment is to continue to bring you all the details on the various CARES Act and Economic Aid Act and all the various pandemic aids that are available certainly on a federal level anyway. And we will continue to keep you guys informed of everything we learn as we move forward. So,
okay, well, thanks, Steve. And one thing I would like to remind everyone is that this webinar is recorded. We do post it on our YouTube channel, so you'll find it out on the Innovative Business Advisors YouTube channel. The recording of the webinar, a copy of the PowerPoint presentation that was presented, along with any SBA docs or any other docs that Steve referenced during the process. Now, I learned something about YouTube last week. Is I always tell everyone on this webinar to look for an email for us letting you know that it's that the webinar has been uploaded for your view. If you go out to our YouTube channel and subscribe, click the subscribe button, you will actually get an email from YouTube every time we upload anything. So if we upload a new document, if we upload a new podcast, if we upload a new webinar, you'll know first that that update has happened. So go out there, take a look, and if nothing else, subscribe, and you'll be getting the updates from us every month. So with that, thanks everyone for joining, and we'll look forward to seeing you next week.
Take care. Thank you, Marquita.